and welcome to my teachers program. So today I am going to discuss the meaning of goodwill and nature and valuation of goodwill. So before I am going to discuss the meaning of goodwill and nature of valuation of goodwill, so I want to revise the previous portion what I had taken last classes. So you know the fundamentals of partnership. You know this year we are going to study the first chapter is the fundamentals of partnership, and the second chapter is the goodwill and nature and valuation of goodwill, and third chapter is the constitution of the firm, and next chapter is admission of partners, the retirement of partners, and death of a partner, and dissolution of partnership. So these are the things what we are going to study first term. So before that I want to discuss what we have studied last classes. You know that what do you mean by partnership, and what are the different features of partnership, and also in the absence of the agreement how will you treat the following items, and what do you mean by profit and loss appropriation account, and statement of adjustments, and interest on capital and interest on drawings, and guaranteeing of a profit. So these are the things what we have studied last classes. So today I am going to discuss another important chapter, that is what is called goodwill and nature and valuation of goodwill. You know that now when we are doing the problems, so we are crediting goodwill account, and also sometimes we are debiting goodwill account, and also the different treatment is there goodwill. But in accountancy actually what do you mean by goodwill, and in what sense we are crediting this goodwill, and what are the different types of goodwill, under what circumstances we are valuing the goodwill, and what are the different methods for valuing the goodwill. These are the points what I am going to discuss today. This is a very important for our coming board examination. So that is why all viewers who are watching me, so all of you listen to my class. So first point is, what do you mean by goodwill? You know that goodwill is an intangible assets which we can't touch and see, and also as per our Intellectual Property Act. So what do you mean by goodwill? Goodwill is an intangible assets which we can't touch and see, and also it is an extra earning capacity of the businessman which is enjoyed among the public is known as goodwill. Once again, it is an extra earning capacity of the businessman which is enjoyed among the public is known as goodwill. So you can see when we are doing the problem, so what is the treatment of goodwill, and what are the factors affecting goodwill? You know that at the time of admission, as well as at the time of retirement of a partners, and at the time of death of a partners, so we are valuing the goodwill. And what is the treatment of goodwill? So first I already said what is the meaning of goodwill. The goodwill is an intangible assets which we can't touch or see. So that is what is called goodwill. But how we are treating this goodwill? You know that the business units we are getting a lot of goodwill as well as reputation is there. So what do you mean by this reputation or goodwill of the firm? Goodwill is an extra earning capacity of the businessman which is enjoyed among the public is known as goodwill. And due to this goodwill, the firm is getting lot of profits. And also due to this goodwill, the firm is getting lot of reputation, and also they are getting, and they can increase the sales, and they can capture more customers. So only because of the goodwill of the firm as well as the goodwill of the product, and etc. etc. So now again I am discussing the meaning of goodwill. It is an extra earning capacity of the businessman which is enjoyed among the public is known as goodwill. Now you can see what are the different types of goodwill is there. So there are two type of goodwill. So all of you look at the monitor. So the goodwill, purchased goodwill is there, and self-generated goodwill is there. This also 2 years before the board is asking this question. What do you mean by, or what are the different types of goodwill? The first goodwill is known as purchased goodwill, and the second goodwill is known as the separated self-generated goodwill. So my question is, what are the different types of goodwill? The first point is purchased goodwill, and the second point is self-generated goodwill. And again simultaneously when we are discussing this particular point, so what are the factors affecting this goodwill? So you know it is a very serious fact. So what are the important factors affecting the goodwill? That means the firm's goodwill is increasing as well as decreasing. And what are the factors affecting for the increasing and the decreasing of this goodwill? So you know that, so there are many factors which is affecting for goodwill of the firm. See, first point is you can see what are the factors. So first point is the location of the firm. What are the different factors affecting the goodwill of the firm? The first point is the location of the firm, and also the quality and quantity of the product, and efficiency of the management, and also the loyalty, how we are maintaining the partners, how we are maintaining the relationship between the partners. So these are the different factors which is affecting the goodwill. Once again, the location of the firm, and also the efficiency of the management, the quality and quantity of the product, and also how we are dealing the loyalty, how we are dealing with the customers, how we are maintaining the relationship between the partners. So these are the the certain factors which is affecting the goodwill. So first point, location. So what do you mean by location? You know that where it is located, the firm is locating. So example, I have already given my previous classes. You know that a bookshop is nearby the universities and college, and also a medical store is nearby the medical college or hospitals, or a canteen is nearby a manufacturing concern. So you know that the location is giving very importance to the firm, where it is locating. You can see in Dubai and city center, all other side, where it is locating. So it is located in ideal places. And also another example I can give you, exchange. It is located in the middle of the town. That means the location is giving very importance to the firm. So that means automatically this location itself is giving importance to the firm. That is what is called another factor which is affecting the goodwill of the firm. So that is what is called the location. And the second point, you know that efficiency of the management. You know that the management efficiency, competitive management is there, or efficient management is there, automatically they can run the business effectively, and also they can settle the problems effectively, and they can administrate the work properly. That is why the efficiency of the management also giving an important fact, or which is another important factor which is affecting the firm's goodwill. And third point, you know that the quality and quantity of the product. You know that the product which is supplied by the businessman, and also their quality of the product also giving equal importance for the reputation of the firm. And the last point, you know that how they are maintaining after sales service, and how they are maintaining the loyalty, or how they are maintaining the relationship between the partners or the customers. That is also another important factor for increasing the value of the firm. So these are the different factors which is affecting the goodwill of the firm. So listen once again. The first point is, what do you mean by goodwill? And the second point is, what are the factors affecting the goodwill, and what are the different types of goodwill? See, different types of goodwill, I already said, the purchase of goodwill and also self-generated goodwill. And the factors affecting goodwill is as follows. Number one, the location and efficiency of the management, and also the loyalty, or how we are treating the customers, and also the quality and quantity of the product. These are the different factors which is affecting the goodwill of the firm. Now I think it is clear. So what do you mean by, and what are the factors affecting the goodwill? Now we can focus. So different methods for the valuation of goodwill. You know that how we are valuing, or how we are calculating this goodwill. So do you think that it is not easy to find out the valuation of goodwill? In what base we are going to value the goodwill? So you know, as per our accountancy terms or accountancy standard, there are 4 methods for valuing the goodwill. The first method is known as average profit method, and the second method is known as super profit method, and third method is known as capitalization method, and fourth one is known as weighted average method. You know that we are already studied all these points. You know, now we are, the second month is already started. Now already midterm test is over. We have studied all these points. So how we are calculating the goodwill? There are 4 methods, and out of that, as per our new syllabus, the weighted average method is not there. So all of you please focus on the first 3 methods. So that is what is called average profit method. The first one is known as average profit method, and the second one is known as, you know, super profit method, and third one is known as capitalization method. You can look at the monitor. So it is clear from here. So there are 3 methods to calculate the goodwill. So there are 3 methods are there. The first one is known as average profit method, and the second one is known as super profit method, and third one is known as capitalization method. So look at the monitor, the first average profit method. So how to calculate profit under average profit method, or how to calculate goodwill under average profit method. So you can see they are given last 2 or 3 years profits, and first method is first you find out average. So how to calculate average? You can see the monitor, the total profit divided by number of years is equal to average. Look at the monitor. So how to calculate average profit? The total profit divided by number of years is equal to average profit. Once we got average profit, that average profit is multiplied with the number of years purchase. So you can see first we are calculate the average profit. So you are getting the average profit. That average profit is multiplied with the number of years purchase is equal to goodwill. So that means first you find out average profit, and second you find out, therefore goodwill is equal to average profit into number of years purchase. So that is what is called, average profit method. We are calculating the goodwill. And now you can see what do you mean by, or how to calculate goodwill under super profit method. This also equally important. How to calculate goodwill under super profit method. The first method is known as average profit, and the second method is known as how to calculate goodwill under super profit method. In this method we can calculate by computing the following steps. By computing the following steps, you can calculate what? Goodwill. First, it is just like the previous. First you find out average profit, and the second you find out normal profit, and then you can find out super profit. Once again, first find out average profit. Look at the monitor. First, so under super profit method, how to calculate goodwill. So you can see first you find out what? Average profit. And second you can find out super profit, that is first you find out average profit, and second find out normal profit. So here one question is coming, how to calculate normal profit. So they are already given capital. So capital employed into rate of return divided by 100. So capital into rate of return, rate divided by 100. Capital employed into rate of return divided by 100 is equal to normal profit. So that means first you find out average profit, and second you find out normal profit. Then next third step is find out super profit. So how to calculate super profit? Average profit minus normal profit is equal to super profit. So the last step is, after calculating the super profit, you supposed to calculate goodwill. So goodwill is equal to super profit into number of years. So number of years purchase. So now you got the answer. Goodwill is equal to super profit into number of years purchase. So that is what is goodwill. Now we have studied two methods. The first method is known as average profit method, how to calculate goodwill. And the second method we are going to discuss how to find out a goodwill under average super profit method. So under this method, the goodwill is calculating by computing the following steps. Number one, first you find out average profit, second you find out normal profit, and third you find out super profit. So average profit, you know the formula, total profit divided by number of years is equal to average profit. Then second step, normal profit. Normal profit is equal to capital employed into rate of return divided by 100 is equal to normal profit. And third one, therefore how to calculate super profit? Average profit minus normal profit is equal to super profit. The last step, after calculating all these things, the last step is therefore how to calculate goodwill, super profit into number of years purchase. Now it is clear. So we have studied two methods, and the last method is known as capitalization method. Now you can see we are already studied two methods, and the last method is known as capitalization method. Under capitalization method also you can calculate goodwill by computing the following steps. The first step is, it is just like the previous one. First step is, first you find out average profit method, that we are already studied, and second you find out normal profit, that also we have studied. Then you can find out super profit, that also we have studied, and therefore goodwill is equal to, so the last point is, therefore goodwill is equal to super profit into 100 divided by rate of return. So this is what is called goodwill. Super profit into 100 divided by rate of return. Once again, super profit into 100 divided by rate of return is equal to goodwill under capitalization method. Or sometimes in the question they are not given capital. So you can find out a capital by computing the formula asset minus liability is equal to capital. Asset minus liability is equal to capital. So you can see the monitor. See, I had given already 2-3 questions. So just go through this. This is all very simple. So how to calculate goodwill under average profit method and super profit method and capitalization method. See, our last method is known as capitalization method. So once again I will repeat how to calculate goodwill under capitalization method. So we are computing the following steps. The first step we are already studied, that is what is called find out average profit. You know the formula. So what is the formula? Average profit is equal to total profit divided by number of years. Now I think it is clear. And the second method is find out the normal profit. That also we are studied. Normal profit is equal to capital employed into rate of return divided by 100. Okay, that also we got. And therefore super profit is equal to average profit minus normal profit. So the last point, after calculating everything, you can calculate goodwill by computing the final step, that is what is called super profit into 100 divided by rate of return is equal to goodwill. So now listen, it is clear. Now this chapter only these 3 methods are there, and it is very simple chapter. After studying this chapter only we can go to other points. So now we have studied 3 methods. So that is what is called average profit method and super profit method and capitalization method. Now next point is so admission of a partner. Now listen, after discussing all these points, so once again I will repeat. So what do you mean by goodwill, and what are the factors affecting goodwill, and how many methods are available to find out a goodwill, and what are the different methods and application. So this part is very very simple. So that is why I am not given any importance for the problem part, because it is a very simple, anybody can do that problem. Now we can come to discuss the next point is what is called admission of a partner. Now you know last board examination they are asking 8-mark question from this part. So accounting treatments and applications and admission of a partner. So here my first question is under what circumstances the firm is going to appoint a new partner. So what are the reasons and what are the effect, and under what circumstances so the firm is going to appoint a new partner. See, answer is very simple. Whenever they require more capital, they can appoint a new partner. And also here some legal points are there. As per section 33 of the Companies Act 1956, so certain legal points are coming. So what is that? So under what circumstances we are appointing a partner, and what are the conditions for admitting a new partner? So answer is very simple. Only with the consent of all partners a partner can be admitted into the firm. So that is the legal provisions. Only with the consent of all partners a partner may be admitted into the firm. So then again another point, under what circumstances a partner is appointed to the firm. See, answer is whenever firm is requires an additional capital, and also they required more efficiency of the management. So efficiency and competitive staffs are required, and that time they are going to appoint a new partner. These 2 points are very very important to the students. The first point is whenever they require an additional capital, and also we require a competent management staff, they are appointing a new partner. And also the legal provision is, with the consent of all partners, they can appoint a new partners. Only with the consent of all partners they can appoint new partners. Only with the consent of all partners they can appoint a new partners. So all of you look at the monitor. So admission of a partner, it is clear. Admission of a partner means a new partner being admitted into the firm. And also the next very important point is, at the time of admitting a new partner, what are the legal provisions and the problems or adjustments made by the existing partners? You know, till yesterday only 2 partners are there. Now we are going to appoint a new partner. So example, A and B are partners. They are going to appoint a new partner C. In my example, so all the partners are A and B are partners. A and B are partners. They are going to appoint a new partner C. So first point is, when we are going to appoint a new partner, what are the legal provisions? And under what circumstances you are going to appoint a new partner? So first you are discussing this point. Number 1. So the legal provision is, only with the consent of all partners a partner can be admitted into the firm. So this is also 1 mark question. Only with the consent, the value based question they are asking. So only with the consent of all partners they can appoint a new partner. And number 2, so what is the circumstances they are going to appoint? What are the reasons? So answer is very simple. Whenever they require an additional capital, and also whenever they require competitive staff or competitive management staff, they can appoint a new partner. So that is why they are appointing a new partner. So my example, A and B are old partners and their ratio is 3:2, and they are going to appoint a new partner. So now the ratio becomes 3:2:1. So what are the problems which is faced by the existing partners or adjustments made by the existing partners at the time of admitting a new partner? You know that till yesterday only 2 partners are there. Now we are going to appoint a new partner. There are lot of adjustments are there. They want to do lot of adjustment at the time of appointing a new partner. So adjustment number 1 is, they want to rearrange their ratios, or otherwise new profit sharing ratio. You can see, so look at this example. A and B are partners, their old ratio is 3:2. Now tomorrow 1 partner is coming, their ratio will change. So our first point is, they want to calculate, rearrange the ratios or new profit sharing ratio. And also 1 more new point is coming. If they are given 2 ratios, we are supposed to calculate sacrifice ratio also. So what is the formula? So calculate, how to calculate sacrifice ratio? Old ratio minus new ratio is equal to sacrifice ratio. See, always you please remember my example. A and B are partners. They are going to appoint a new partner C. So here what are the legal provision? Point number 1. Legal provision is, only with the consent of all partners a partner may be admitted into the firm. And the second point is, they require an additional capital, and also they want competitive management staff. So that is why they are appointing a new partner C. Then again look at their old ratio. Their old ratio is 3:2. Their new ratio, they are going to change the ratios. Obviously they are going to change the ratio. That is what is called, you can see, 3:2:1. So here my point is coming, what are the problems or adjustments made by the existing partners at the time of admitting a new partner? So there are lot of adjustments are there, or lot of problems are there. So they are facing, or they made some adjustment. Adjustment number 1 is, they are going to rearrange in the ratio. The ratio, you can see the ratio is changed now, 3:2:1. Till yesterday only 2 partners, and tomorrow 3 partners are there. The ratio is changing, that is 3:2:1. and also at that time they are old partners are sacrificing something for the benefit of new partner. So there you can see we want to calculate sacrifice ratio also. The formula is old ratio minus new ratio. These are very simple points, that's why I am not giving much importance for this part. So here how to calculate sacrifice ratio. So the sacrifice ratio is equal to old ratio minus new ratio. So my first point is rearranging the ratios, or they are going to change the ratio. And second point is the treatment of goodwill. So you know, my dear students, this point is very important for you. The second point is the treatment of goodwill. So here we are already studied the previous chapter. So what is goodwill? Here the treatment of goodwill, my second point, or the adjustments made by the existing partners at the time of admitting a new partner is the treatment of goodwill. You know that when we are appointing a new partner, the new partner is, or he is bought capital, or we are bringing bringing capital along with goodwill, or he is giving a goodwill along with the capital. So here what are the treatment of goodwill under admission, or at the time of admitting a new partner? So the second point is the treatment of goodwill. So there are 5-6 treatments are there at the time of admitting a new partner. So the point number 1, the new partner brought goodwill which is given to the new partner, the new partner is brought the goodwill which is given to the old partner privately. So any journal entries are there or not? What are the accounting treatments? The new partner brought the goodwill and which is given to the old partners and privately. So outside the business, any accounting treatments are there or not? So my point, once again I will make it clear. So what do you mean say, what are the accounting treatments connected with the goodwill? The goodwill treatment number 1 is at the time of admitting a new partner, there are many treatments. The point number 1 is the change of the ratio, and the second point is the treatment of goodwill, and third point you know that revaluation of assets and liabilities, and fourth point is you know the treatment and the distribution of undistributed profit and losses, and the last point you can see the capital adjustments. So these are the main points. So once again, so at the time of admitting a new partner, what are the problems faced by the existing partners? The point number 1 is the treatment of, first point is the change in the profit sharing ratio, and the second point is the treatment of goodwill, and third point you know that revaluation of assets and liabilities, and next point is distribution of undistributed profit or losses, and the last point is the capital adjustments. So these are the points and adjustments which is made by the existing partners at the time of admitting a new partner. And out of that I already said the first point is they are going to change the ratio. So that is what I said. Till yesterday the ratio is 3:2, and tomorrow onwards the ratio is going to change, and 3:2:1, and also simultaneously they are preparing a sacrifice ratio, that is what is called old ratio minus new ratio. Now we can discuss the second point, that is what is called the treatment of goodwill, and the theory and the meaning of goodwill, methods, everything I will discuss. Now along with the capital, the new partner is bringing certain extra amounts, and that particular amount is for goodwill, so brought by the new partner, and which is given to the old partners privately outside the business. So any journal entries are there or not? That is my question. So now we are discussing the accounting treatments of goodwill at the time of admission of a new partner or admitting a new partner. The new partner is bringing and goodwill which is given to the old partners privately outside the business. So this question answer is very simple. So there we are not passing any journal entry. Why? Because the goodwill which is given to the old partners privately outside the business, underline the word privately outside the business, because that particular expense or income we are not treated into the business, because which is privately given by the new partner to the old partner. So our contest is At the time of admitting a new partner, under in any circumstances, the new partner is giving that goodwill or extra amount or a premium which is given to the old partners privately outside the business. We are not passing any journal entry, and that is a case number 1. And case number 2, the new partner is bringing goodwill along with the capital. So what is the journal entry? The new partner, in my example, suppose C is a new partner, C is bringing capital along with the goodwill. So what is the journal entry? So our journal entry is cash account debtor. So cash account debtor to C's capital and to C's premium for goodwill accounts. So entry is very simple, cash account debtor to C's capital to premium for goodwill account. So that is the case number 2. The new partner is bringing goodwill along with the capital, and also and this premium we are distributed to the old partners according to sacrifice ratio. So journal entry number A and journal entry B. So first case is the new partner is bringing goodwill along with the capital. Journal entry is cash account debtor to C's capital to premium for goodwill, and simultaneously the premium for goodwill account, debtor to A's capital and to B's capital. So look at this journal entry. First he is bringing goodwill along with the capital. So our journal entry is cash account debtor to C's capital to premium for goodwill account, and simultaneously that premium which is bought by the new partner is distributed to old partner's capital account according to sacrifice ratio. So our entry is the premium for goodwill account debtor to A's capital account, debtor to B's capital account, but being the premium brought by the new partner is distributed to the old partners under sacrifice ratio. So that is very important. So which ratio we are dividing that goodwill amount? That goodwill amount is divided among the old partners capital account according to sacrifice ratio. So now second case also over. Now third case is at the time of admitting a new partner, already goodwill is existed in the firm. So what is the journal entry? So here the goodwill is already existed in the firm. So at the time of admitting a new partner in our business, goodwill is already existed. So that is the case number 3. So goodwill is already existed in the firm. So what is the journal entry? Very simple. In our example, A's capital account debtor and B's capital account debtor to goodwill account. A's capital account debtor, B's capital account debtor to goodwill account, which ratio? But we are dividing according to old ratio. We are being the existing goodwill is written off according to old ratio. Once again, A's capital account debtor, B's capital account debtor to goodwill account. So what is the context for this? The context is at the time of admitting a new partner, the goodwill is already existed in the firm. So that particular goodwill is written off. Journal entry is as follows. So A's capital account debtor and B's capital account debtor to goodwill account. Now we have studied 3 contexts. The first one is the new partner is bringing goodwill which is given to the old partners privately outside the business. So in that cases no journal entry is there. And the second case is the new partner is bringing goodwill along with the capital which is distributed to the old partners. So entry is cash account debtor to C's capital to premium for goodwill, and the premium for goodwill account debtor to old partners capital account. Narration is being the premium brought by the new partner is distributed to the old partners according to sacrifice ratio. Now listen, at third context is at the time of admitting a new partner, the goodwill is already existed in the firm. So what we are going to do with that goodwill? So we cannot adjust that goodwill. That goodwill we are going to wind up, or the goodwill is we are written off. So journal entry is old partners capital account debtor to goodwill account. So in my example, A's capital account debtor, B's capital account debtor to goodwill account. So that means which ratio we are applying here? Old ratio. That goodwill amount is divided among old partners capital account according to old ratio. Journal entry is A's capital account debtor, B's capital account debtor to goodwill account. Now third context also over. So next point is very important thing, that is, he is unable to bring the goodwill. Suppose the new partner is unable to bring the goodwill. Suppose the new partner is coming, but he is unable to bring the goodwill. So journal entry, in my example, journal entry is C's current account debtor to A's current account and B's current account. So case number 3, case number 4, the new partner, in my example, C is unable to bring the goodwill. So our journal entry is, so C is a new partner and his current account should be debited. So C's current account debtor to A's current account, and to B's current account. So what is the context? So C is unable to bring the goodwill. So we are transferring or we are debiting, so new partner's current account and crediting other partner's current account. So entry is C's current account debtor to A's current account, debtor to B's current account. C's current account debtor to A's current account and B's current account. So what is the context? C is unable to bring the goodwill. And now next point is the case number 4. So the new partner is bringing a kind, instead of bringing cash for goodwill, is bringing an asset. So what is the entry? So asset account debtor to premium for goodwill account. So instead of bringing cash, the new partner is bringing an asset instead of bringing cash in the form of a goodwill, and he is bringing an asset. So what is the journal entry? This is the case number 5. So case number 5 is, he is bringing a plant or a land, whatever it is. So it is that is what is called kind. The new partner is bringing a kind instead of a goodwill. So entry is asset account debtor to premium for goodwill account, and also the premium for goodwill account debtor to A's capital and B's capital account. So asset account debtor to premium for goodwill account and premium for goodwill account debtor to A's capital and B's capital. Now we have studied 5 conducts. So first point, once again I will repeat, because it is very important to the board examination, because when we are doing application part, these entries are very important. Otherwise the students are always making mistakes. So that is why all of you please focus on these particular entries, and also the application level give more importance. The first point is, what are the treatment of goodwill? So now we are discussing at the time of admitting a new partner, and what are the problems faced by the existing partners. The problem number 1, they are going to rearrange or change the ratios, and also we are giving importance for sacrifice ratio. And the second point is the treatment of goodwill, and the third point is the revaluation of assets and liabilities, and next point is distribution of undistributed profit and losses, and the last point is capital adjustment. So these are the adjustments made by the existing partners at the time of admitting a new partner. And out of that we have studied now only 2 points. So point number 1, change the ratio, and the second point is the treatment of goodwill. And once again, so I will repeat the treatment of goodwill, that is the goodwill brought by the new partner which is given to the old partners privately outside the business. We are not passing any journal entry. This is an accounting treatments connected with the goodwill. And the second point is the new partner is bringing goodwill and along with the capital which is given to the old partners, and they are distributed to the partners' capital accounts. So journal entry is cash account debtor to C's capital to premium for goodwill, and premium for goodwill account debtor to old partners' capital account according to sacrifice ratio. And case number 3, at the time of admitting a new partner, the goodwill is already existed in the firm. So journal entry is old partners capital account debtor to goodwill account, and being the old goodwill is written off according to old ratio. And next case is, he is unable to bring the goodwill. So the new partner is unable to bring the goodwill. So journal entry is, so in my example, the new partner's current account debtor to old partner's current account. That also we are dividing according to sacrifice ratio. Then next point is, so the new partner is bringing a kind. So what is a journal entry? So kind in the sense he is bringing plant, machinery, land and whatever it is. So here our journal entry is, so asset account debtor to premium for goodwill, and that premium for goodwill account debtor to old partners capital account sacrifice ratio. Again 2-3 adjustments are left, and he is bringing a part of the goodwill, and also he is unable to bring the goodwill, and then afterwards we are going to discuss the revaluation of assets and liabilities and the treatment of undistributed profits and capital adjustment. You know that as far as examination point of view, and this part is very important to the students, because the board is normally asking 8-mark questions. All of you thorough with the subjects, then only you are able to get good marks. Okay, so now this is the time for winding off. So once again, thank you very much. See, my name is, you know, James Thomas, Sharjah Indian School, and once again I am giving my gratitude and thanks to all viewers who are watching my classes and getting a very good feedback from my parents and students. So once again, so thank you very much.